Welcome to today's market report. European stock markets pushed higher on Monday, helped by gains from the oil majors as crude prices soared, while hopes for a global recovery from the COVID-19 pandemic also supported financial stocks. DAX in Germany traded 0.9% higher, CAC 40 rose 0.7%, FTSE 100 climbed 0.6%. The heavily weighted oil majors helped push the overall market higher, with BP, Royal Dutch Shell and Total all posting stock gains of over 1%. This followed strong gains in crude prices as Houthi rebels in Yemen fired missiles targeting the Saudi Arabian oil industry on Sunday, including Saudi Aramco's facility at Ras Tanura, which is capable of exporting roughly 6.5 billion barrels a day. Saudi Arabia reported no loss of life or significant damage to the facilities. Crude futures traded 0.9% higher at $66.65 per barrel. Brent rose 0.9% to $69.97 per barrel, earlier climbing above $70 per barrel for the first time since the beginning of the pandemic. Banking and insurance stocks were also supported by the ongoing rise in bond yields, even though the economic recovery appears likely to arrive later in continental Europe than in the US and the UK due to delays in rolling out vaccine against COVID-19. The DAX 600 banks index rose 2.6%, with banks from the Netherlands and Sweden to Greece hit their highest levels in over a year. China's exports surged in the first 2 months of the year, up over 60% in dollar terms, reflecting strong global demand for manufactured goods and boosting confidence that the global economy is in a strong recovery phase. Additionally, the US Senate passed a $1.9 trillion stimulus package proposed by President Joe Biden earlier this year over the weekend. This raises the likelihood that this bill will be passed into law before enhanced jobless benefits expire on March the 14th. Equity markets have been boosted over the last few months by the expectation that loose fiscal and monetary policy will give a powerful boost to the economic recovery. But optimism has been tempered by fears over rising inflation and interest rates. In European corporate news, Direct Line stock rose 0.7% after the insurer declared both a final dividend and a share buyback, even as its pretax profit fell in 2020. Pearson stock fell 3.1% after the company launched a review of its international publishing businesses, as its suggested profit and revenue fell in 2020. Also of interest was the announcement that food delivery firm Deliveroo plans a London listing in the first half of 2021, which is expected to value the company at more than $7 billion. Gold futures fell 0.4% to $1,692.50 per ounce. On the FX front, GBP/USD is under pressure as US growth expectations boost the dollar. The UK's reopening and rapid vaccination campaign are helping sterling hold up, but the cable is set to succumb to dollar strength. Britain's first stage of reopening is a boost to the economy as parents will now be able to work more easily at home without interruption from their kids. The nation also benefits from its rapid vaccination campaign. 1 in every 3 Brits has received protection against COVID-19, and younger age groups are now being included. Sterling is battling with the might of rising US bond yields. Returns on 10-year treasuries are hovering around 1.6%, the highest since the crisis, and buoyed by first upbeat developments. The US Senate passed a modified version of President Joe Biden's package suggestion, which is now set for rapid approval by the House. Support awaits at Friday's low of 137.80 for cable, followed by 137.40, which capped cable back in early February. Further down, 136.80 is eyed. Resistance awaits at 138.60 and then by 138.80 and 139.30, or accompanied the pair's recent slide. Euro-dollar tumbles to 4-month lows near 118.70. Sellers continue in total control of the sentiment around the single currency and dragged the pair to fresh multi-month low. Euro-dollar retreats from the fourth consecutive session at the beginning of the week and extend the recent breakdown of the key barrier at 119, the figure. The improvement surrounding the greenback picks up extra pace, always underpinned by the expected outperformance of the US economy versus its G10 peers, which is in turn supported by the slow pace of the vaccine rollout in the old continent. The dollar is trading around 3-month highs after the passage of the massive relief bill through the Senate. The dollar index was up 0.2% at 92.128. This is today's market news. Thanks for listening. We'll see you next time.